Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. It has been a very whipsaw price action this week, starting with the RBA rate decision, seeing a 25 basis point rate cut, and then we've got the US Federal Reserve, Jerome Powell, coming out and indicating or hinting that they could ease rates as well this year. Has put a bit of a spin on the US dollar. The Australian dollar, though, took a challenge to the upside and hit a high close to 70 cents and didn't take out the stop loss at 70.15, so I'm still intact and still bearish. I believe the market has fouled at the topside challenge and therefore should see a drop back towards 69.35. A break beneath there would give further scope to the downside and still remain to its objective of 68 cents. The bulls took a brief journey to the upside overnight, took on the challenge of 112.55.65 and clearly staged a very, very strong rejection. It is from that I do believe the market should now turn back to the downside and look towards the bottom side of the range around 110.70 to 85 with immediate resist support, that is, at 111.85. From this price action, a bearish outside range day now needs confirmation. To get that confirmation is a break beneath the 112 handle. That would see the market plummet further to the objective of 110.70 to 85. Don't get too confident at the moment when it comes to the dollar yen on the bull case. I know we've got an outside range day in play, but need confirmation. That confirmation is quite a way. It's right up here, somewhere around 108.70. In the meantime, the technical indicators are not supporting this rebound and therefore could still see a challenge back to the downside of 107.85.95 and beneath there to 106.50. I still believe there is geopolitical risk out in the broader spectrum, and in terms of the market trading in a bullish fashion, then the yen needs to weaken, which I don't believe will, because safe haven demand is still holding to the yen, so therefore should pressure the downside. The pound is likely to get a little bit whippy now. After taking the challenge up to 127.43 high last night, the market backed away slightly. Still looking relatively bullish, and we still have Theresa May stepping down this Friday, so therefore could see a bit more in terms of whippiness in price action. Nevertheless, I believe the market should still continue on towards these topside targets I put in here at 127.60 to 128.20, where the technical implications marrying up with the RSI to the MACD does give me the view that we should see further indication to the top side. If you look at the broader picture on gold, you can see the market took the challenge at 1,343 and rejects the February high. And from that rejection gives some concern. With the dollar rebounding the way it has, actually could see a pullback, and therefore to the lows of 1,320. If we fail to get that pullback today, then the market will probably take on the challenge to the top side and clear 1,343 and look to the target of 1,350. Wrapping up with oil, the market is still relatively bearish and now looks to the target of $50 a barrel. I haven't had a strong view since the break of 60, but now nearly $10 off that high. The fact is that beneath 50 could bring in a target of 46. We are trending. MACD is still good in supporting this move down, but we are oversold. Let's see if we take 50 out first. Well, that wraps up for today. Thank you very much for joining me, and as always, look out for the intraday report. I hope you enjoy the great start to this new day.